Most people are stuck at level 3. They think they're fine because they're not overdrafting. From level 1 to level 7, this is the full broke ladder. And the jump from 3 to 4? That's where most 20-somethings fall off. By the end of this video, you'll know exactly where you are, and more importantly, how to climb out. Here's what nobody tells you about being broke. It's not just about your bank balance. It's about the systems you're stuck in, the traps you don't see, the fees that compound while you sleep. Most people think they're at level 2 when they're actually at level 5. And by the time they realize it, the math has already turned against them. Let's walk the ladder. Level 1 is survival mode. You're covering rent, you're eating, the lights stay on, but there's nothing left over. Here's the stat that defines this level. The average American under 30 has $300 in savings. That's it. One car repair away from chaos. You know you're here if you check your bank balance before every purchase. If you're counting days until payday. If going out means 1 drink, not 3. Here's the thing about level 1. You're not building wealth, but you're also not actively drowning. Yet. Level 2 is where 61% of Americans live, paycheck to paycheck. Every dollar is already spent before it hits your account. The average person at this level has $1,300 in monthly fixed costs. Rent, car payment, insurance, subscriptions. And if their income is $2,000 after tax, that leaves $700 for food, gas, and everything else. You know you're here if you can't skip a paycheck without missing rent. If your credit card gets paid off and maxed out in the same month. If you've ever said, "I get paid Friday," to avoid plans. The American dream, right? Working full-time to stay exactly where you are. Level 3 is where the math starts working against you. You're not just broke, you're paying to be broke. The average credit card balance for people under 30 is $3,700. At 21% APR, that's $64 a month in interest alone. Money you're spending on nothing. You know you're here if you're making minimum payments, if you've used one card to pay another, if you know exactly how many days you have before the next statement closes. Here's the sting. Every month you stay at level 3, you fall further behind. The balance grows faster than you can pay it. Level 4 is where one problem becomes 5. Credit cards maxed, student loans in forbearance, maybe a personal loan you took to consolidate. Here's the number. The average American at level 4 carries $21,000 in non-mortgage debt. That's credit cards, car loans, student loans, medical bills, all compounding. You know you're here if you're dodging calls from unknown numbers, if you've Googled how to negotiate with collections, if your credit score dropped 100 points in 6 months and you're not sure why. Level 4 is where people start making desperate moves. Payday loans, title loans, borrowing from family. Each move digs the hole deeper. Level 5 is the invisible broke. On paper, you make decent money, $50,000, $60,000 a year, but you never see it. Here's what this looks like. Your paycheck is $2,500, but $400 goes to debt minimums, $300 to subscriptions and apps you forgot about, $200 to overdraft and late fees from last month. You know you're here if you make more than most of your friends but feel broker than all of them. If you're working side hustles just to cover the gaps. If you've ever looked at your pay stub and thought, where does it all go? Level 5 is the burnout zone. You're working harder, making more, and somehow ending every month at 0. Level 6 is where compound interest stops being your friend and becomes your enemy. You're not just in debt. You're in debt that's growing faster than you can work. The average person here is paying $1,000 a month just in interest, not principal, interest. That's $12,000 a year on money they already spent.
You know you're here if your balances never go down even when you pay.
If you've calculated how long it would take to pay off your debt, and the answer was decades. If you've thought about bankruptcy but you're not sure if you qualify. Here's the brutal part. Most people don't realize they're at level 6 until they've been there for years. The monthly payments feel manageable, until you zoom out and see the total. Level 7 is full collapse. Your credit is destroyed. Collections owns your phone number. You're one emergency away from homelessness. 10 million Americans are at level 7 right now. Credit scores below 500, accounts in default, wage garnishments, eviction notices. You know you're here if you're unbanked because every account you open gets levied. If you're working cash jobs to avoid garnishment. If you've moved 3 times in 2 years because you can't pass a background check. Level 7 is where the system has given up on you. And most people here didn't get here through laziness or stupidity. They got here through 1 bad month that turned into 6. This is the bottom of the ladder. But it's not the end. So, where are you? If you're at level 1 or 2, your move is simple. Build a $500 buffer. That's it. That's the gap between surviving and stable. Level 3 or 4? Stop the bleeding. Freeze the cards. Snowball the smallest balance. You need a win. Level 5 or 6? You need a system overhaul. Every subscription gets cut. Every automatic payment gets audited. You're not broke because you don't make enough. You're broke because 50 things are taking $20 a month. And if you're at level 7? You need professional help. A bankruptcy attorney, a credit counselor, someone who knows the system. The ladder goes both ways. You can climb back up, 1 level at a time.